Imagine this. Your company is absolutely crushing it. We're talking record sales, flawless execution. The future looks incredible. And then, just like that, something completely out of your control changes everything. Today, we're going to break down the story of PG Electroplast and how a single storm, yep, the weather, threatened to wash their entire year down the drain.
It sounds a little over the top, right? How can some early rain cause a multi-million-dollar problem for a huge company? Well, that's the big question here, and we're going to walk through exactly how a simple shift in the weather created this massive financial headache, step by step.
Okay, so to really get the scale of this problem, you first have to see just how high they were flying. At the start of the year, PG Electroplast, we'll call them PGEL, was on an absolute tear. They make consumer goods for all the big brands, and their air conditioner business in particular was just exploding. The stage was set for an absolutely epic summer.
And this wasn't just wishful thinking. This confidence was coming straight from the top. The company's MD, Vishal Gupta, basically said, look, we just had an amazing year of growth, demand, and execution. They weren't just hoping for a big year. They were totally geared up and ready for it. And they had the numbers to prove it. As April got hotter and hotter, their AC sales went through the roof. I mean, look at this, a staggering 70% growth compared to the same month last year. The plan wasn't just working, it was blowing every single expectation out of the water.
But just as the company was hitting its peak, the villain of our story shows up. An unseasonably early, widespread monsoon just swept across the country, and just like that, summer was over.
And the speed of this collapse was just wow. You can see it right here. The company goes from that amazing 70% growth in April to a sudden slowdown in May as the rain started. But then, by June and July, the market completely tanks. We're talking a 70% year-over-year drop. Demand didn't just slow down, it completely vanished.
Now, this wasn't just about people not buying ACs. That early rain set off this painful domino effect that went all the way from the store shelf, back through the warehouses, and landed right on the factory floor. This is where a weather problem turned into a full-blown financial crisis. So to really get what happened next, you have to understand this one key idea: channel inventory. Basically, that's all the product, all those AC units that are already sitting with distributors and in retail stores. When people suddenly stop buying, that entire channel gets choked with stuff that isn't moving. And that choked channel is the first domino. So, the monsoon hits and nobody's buying ACs. The retailers get stuck with all these unsold boxes. Then, the big AC brands see this, and they panic. They immediately slam the brakes on any new orders to their suppliers. And who's at the very end of that chain? PGEL, the manufacturer. They get hit the hardest.
And the result was immediate, and it was brutal. PGL's clients, those big AC brands, started canceling orders for the rest of the summer. And we're not talking about a few orders here and there. We're talking 50 to 70% of them. Gone. Just like that. Leaving PGL holding millions in parts they had no one to sell to.
So, all of this came to a head on the company's earnings call. This is where they had to stand in front of their investors and put a real number on the damage. And let me tell you, these numbers are pretty eye-opening.
Let's start with the baseline. In a normal year, a healthy year, PGIL would have about 368 crores worth of raw materials for their AC business. Totally manageable. But this year, with all those orders suddenly canceled, that number exploded to 1,200 crores. That is a massive amount of material just sitting there, tying up an incredible amount of cash.
And when you have that much cash stuck in inventory, well, it's got to hit your bottom line. Last year, in this same quarter, the company made a really healthy profit of almost 85 crores.
This year, that profit dropped to under 67 crores. And why? Because holding all that extra inventory costs a ton of money. You got to store it, you got to finance it, and all those costs took a huge bite out of their profits, even though their overall sales were actually up.
So, what do you do when a crisis like this hits you out of nowhere? You don't panic, you recalibrate. And that is exactly what PGL's management did. They laid out a very clear plan to navigate the storm. The first step was being transparent and adjusting all their key targets for the year. They pulled back on their CapEx, that's the big money they spend on things like new factories and equipment,
and they revised their revenue and profit goals down to something much more realistic given the circumstances.
But this wasn't just about cutting things back. It was a really smart strategic pivot. To save cash, yeah, they're delaying some machinery orders. But, and this is the important part, they are not stopping their long-term investments, like buying land and putting up buildings. It's a really careful balancing act. Be cautious in the short term, but don't sacrifice your long-term vision.
And that brings us to the final part of this story, looking beyond this one really bad season to the bigger picture. Is the company fundamentally broken, or is this just a temporary setback they can bounce back from?
And this, right here, is the company's saving grace. They are diversified. Yes, the AC business is huge for them, but it's not their only business. Their washing machine segment, for example, saw really strong growth of 36%. That strength in other areas was a crucial cushion when their biggest market completely fell apart.
This quote from management really says it all, doesn't it? One season has gone wrong, our long-term assumptions do not change. They're basically saying, look, this was a speed bump, not a roadblock. They believe one bad summer doesn't change the fantastic long-term growth story for their market.
So this leaves us with one last really big question. PG&L seems to be navigating this crisis, but is their story just a one-off, a temporary blip, or is it a massive warning sign for every single industry that depends on predictable weather in a world with an increasingly unpredictable climate? What happens when you can't count on summer to actually be hot and dry? That's a question the entire market is now being forced to answer.